All right, so good afternoon, everyone. Thank you for joining us today for our presentation by Vanessa Martin. Vanessa Martin's with Lending Gigs here at Graystone Investment Group. I'm going to be hosting the event today. My name is Michael Canoto. I'm the brokerage manager here at Graystone. We're excited to have you here. And just a reminder, this is a recorded event. Also, if you have any questions, put your questions in the chat or raise your hand. We'll be happy to answer those. But without any further delay, I'm going to hand it over to Vanessa Martin.
Hi, good evening, everybody. Thank you so much for joining us. We've gotten so many questions about this particular topic over the last couple of months, especially with the way rates are going. It's just very hard for first-time home buyers, especially. So with that, we're going to go through understanding the down payment assistance programs and how they can help you as a buyer, right? So what kind of programs are there, right? So the down payment assistance programs comes in three options, right, for buyers. There's grants, which is free money. Those are not expected to be paid back. These programs are provide eligible home buyers with down payment help. It covers, things as closing costs. It could cover, some other things as well, mostly closing costs. And it'll help them get into the home sooner than they would otherwise, right? And in most cases, these programs are offered to first-time home buyers, low-income home buyers, and buyers with moderate income. So the programs vary as far as income is concerned. So, and then they have forgivable loans, and those you don't have to pay back. And there is certain conditions that need to be met. And then you have deferred payment loans. They must be repaid, but not right away, right? So those are the three different ones that we're going to be talking about this evening. So let's talk about some of the three most common types of programs, right? And like I said, the first one we talked about was grants. So basically a grant is given by, most of them are state programs. Some are federal, but most are state programs. And they are gifts at closing provided by an eligible third party to help cover the cost of some of those down payment or closing costs. Grants are great because they don't have to be repaid by the home buyer. They don't incur a lien, so it doesn't show up as a lien on the property being purchased. And it doesn't have anything to do with the note or the deed, right? So that's really good. And state programs, those are typically offered through housing finance agencies like HUD, or maybe some other state-run program. Like here, they have Homes for Heroes. That might be one that you might be familiar with, right? Or development authorities that are run by the state. Larger cities may even have their own development authorities. Department of Housing and Urban Development, HUD, maintains a local buying directory. So they keep track of all these programs. And when a client wants to get the down payment assistance, they can just go and fill out a form. And these applications, most of them are free to fill out. There's no obligation to the client. So the client goes to this website, fills out the information, their income, answers a couple of questions, and it's instantaneously. They get back automatically what they qualify for. And as an agent, if you're representing the client, you would get that email as well. So everyone's in the know, and then they can take that email with the programs that they're qualified for, and they can take it right to someone in our department, and we can shop around and see which lenders are going to work with those programs. So that's probably one of the best things about that one, about those state programs. Second mortgage programs, right, is something totally different. Many down payment programs come in the form of a second mortgage. Those are actual liens, subordinate liens, and they vary with payback provisions. So there's different ways you can pay that back, right? A repayable down payment program provides down payment funds at closing, often with zero interest, no interest, right, on the second loan. Some may accrue some interest, right, and some may be amortizing over the period of the loan. The programs typically range anywhere from 5-year to 30-year, and which may start immediately or kick in after a predetermined time. So say if you do get a second mortgage program to help you with down payment assistance, it may not kick in for maybe 3-4 years down the road, right? And then you'll have to start repaying it. And the interest, they usually run no interest with these. But again, they are something that you definitely have to repay. The other thing with second mortgage programs, they have what's called the deferred or silent second programs, which postpone your repayment of the down payment assistance until the borrower sells, refinances, rents, or moves out of the home. So plain speak, you don't have to worry about repaying this type of down payment program until you sell the property, they refinance it, they rent it, or they move out of the home. So buyers who plan to live in the home for several years will benefit most from this one because you're going off the appreciation and value. And then there's forgivable second mortgage programs, right, which forgive some or all of the down payment amount. When and how much of that down payment help is forgiven may vary. Again, all these programs have variables and they depend on different things. It's common for a percentage of the loan to be forgiven each year of the predefined number of years. However, if the program's conditions are not met, for example, if the buyer moves out of the home, the loan must be repaid, sometimes with interest. So again, if you're signing up for some of these down payment programs, you may want to make sure that you really understand, especially with the second mortgage programs, what your qualifications are and what you have to show and prove and all that stuff. So who qualifies, right, for first-time home buyers? So, and there's so many miscommunication and misunderstanding about who qualifies as a first-time home buyer, right? So they may not have owned a home within the last 3 years. So you may have a client, you may be a renter and you owned a home before, but as long as you have not held a mortgage, you have not owned a home in the last 3 years, you qualify as a first-time home buyer. Must be used for your primary home, so you can't use these programs for second homes, investment homes, vacation homes. You can't use it for that. It has to be your primary home. You have to take the occupancy within 60 days of closing. So if there is some work or there's somebody in there, as long as you take occupancy within 60 days of closing, you will qualify as a first-time home buyer. Also, there's household income limits may apply. And again, when you fill out the application or your buyer fills out the application, it'll tell you what those limits are. And then, of course, you have credit score minimums. Right now, we're seeing anywhere with the down payment programs, as low as 580, right? And again, those limits as far as credit score minimums, they vary by the lender, right? So it depends on which lender you use. They all have different criteria. But again, when you apply for these programs, they're very specific about what your minimum credit score needs to be, right? So where do you start? Where do you start as a first-time home buyer? How can you help that buyer getting their first home, right? I know when buyers come to us, they are overwhelmed with how much information is out there. Where do I start? I don't know what to do, right? So we try and make the process easy to understand, but we want you to be engaged, right? As a buyer, engaged in the process 100% of the way. And there's simple steps that you can take to prepare for this purchase, right? And I know when we meet clients for the first time, I always ask them, the first thing I ask them is, when was the last time you pulled your credit, right? I know I pull my credit. I go to this website and I pull it once a year. You can pull it absolutely for free. There's no cost to you to do that. And it's just good to do that once a year because you know exactly what is on your credit, when the last time somebody pulled your credit, if there's errors on your credit. I pulled it one time and I remember I had some job on there that I, first of all, never heard of this employer. And it showed up on my credit. I was like, I don't know who this person is, right? Or where that job is. So I had to take the time to go online and get it off of there. And I did. So just things like that, wrong addresses, wrong birth dates, mistakes are happen because again, all this stuff is manually input by someone. So just to make sure that you are checking it, pull it once a year, just to make sure what's on there and all the information is correct, right? After you review it, or if you pull your credit report and you say, you know what, I don't understand what any of this stuff means. I can't read this. Find yourself a certified credit specialist or bring it in to one of someone on my team, and we will absolutely be able to sit down with you and go over your credit report and kind of help you at least read it so you understand what's on there, and we'll help you as well how to get some of those things off of there. The good thing about annualcreditreport.com is that it's pretty self-explanatory. It's very easy to use. It's pretty friendly user, right? So you're able to get on the website, and if there is a mistake, you can actually put in the information and you can get them to fix it right then and there. If it's something that's really extraordinary, charge-offs or certain things that you want to get taken care of, and a certified credit specialist can help you with that. We do have some names of some people that will help you and your clients. Again, just reach out to us and ask. We'll be more than happy to provide that information for you. Again, but just make sure that they're certified. And request a copy of your home loan toolkit. That, again, is an absolutely free thing. You can contact myself or anyone on my team, and we can get you a copy of the home loan toolkit. Again, it's a lot of information, but what I really like about that is, number one, it's free to you as a consumer to get this information. And two, it takes you through the entire home buying process, everything from pulling your credit, understanding your credit, buying a home, getting the mortgage, everything that happens step by step in this process is available to you using this home loan toolkit. So, and again, everybody is going to get a copy of that home loan toolkit at the end of our webinar. So hopefully you will take advantage of that. So understanding the credit score, right? And again, a lot of people look at this and they're like, I have no idea what goes into this. So there's things to remember. There's 3 major credit reporting agencies that create credit reports, which include a history of your credit, your loans, and other financial information. And these credit reports are used to calculate your credit score. So the information from your credit report, that affects your score. What does it include, right? So payment history. So paying your bills on time, right? Making sure that your clients are paying their bills on time. I tell everybody, if you can get on auto pay and pay at the same time every single month, that is certainly going to help you raise your score because you're not going to miss any payments. Everything's on auto pay. And a lot of times, some companies, you even save a little bit of money if you enroll in auto pay. I know with mortgages, car payments, credit cards, if you join auto pay, I know a lot of times they'll give you a percentage off at the end or the front of the loan, right? So that's good. What also affects it? Outstanding balances. So I don't know if anybody follows Dave Ramsey. I'm a huge fan of his, right? And his method of paying off your bills, right? Outstanding balances, start with the very smallest one, pay those off, and then snowball it, and then just keep paying until you pay off those balances. So any outstanding balances, again, the lower they are, pay those off if you can. That'll help your credit score. Length of credit history, right? That's another thing. If you have something that's been out there a really long time, again, just make sure that you're paying that off continuously. And then types of credit accounts, right? So the types of accounts that are on your credit is going to be your mortgages, of course, car loans, credit cards, installment loans. So those are the types of things that are going to show up on your credit, and that's all going to get counted in your credit score. Oh, I hope that makes sense. So what if my credit needs work, right? Again, your credit score directly affects, your power to buy, basically, right? We don't like it, but that's just the way it works, right? So again, paying your loans on time, paying your bills on time, trying to dispute things that are maybe on there that's really old. A lot of people don't know that legally they can only stay on your credit a certain amount of time, and then you can request to take them off, right? Not getting too close to your credit limit. So if you have a credit limit and say it's $5,000, try not to get too close to that credit limit, because that's going to affect your credit score. Having long credit history, making sure your credit report doesn't have any errors. Again, that goes back to pulling it every year. That's how you can work on your credit. Only apply for credit when you need it, right? Especially if you go under contract to buy a house, your agent or your lender will tell you, please don't go out and buy a car, don't buy furniture for your new home, don't buy anything on credit, right? If you can't afford it cash, do not buy it until after you close on the house. And please don't change jobs either. Right? We find sometimes buyers will do that. They'll change jobs mid-range. Sometimes it can't be avoided, but try to avoid that. There's some new apps also to improve your credit. I want you to add a new app on your phone. No, but there are apps available. There's Credit Karma, I know, has an app to help you improve your credit. There's some other apps where you can actually put in your bills and your rent if you're paying rent. And as you pay those on time, those will help improve your credit score. So looking into maybe some of those. And then again, if your credit really, really needs help, again, reach out to a certified licensed credit counselor. Make sure you really do your due diligence in hiring someone who's going to help you, because most of those services, they do cost you money. So again, just making sure that you do your homework and you hire someone that is certified, they're licensed, they have references, you've done your due diligence, again, because they're going to be helping you hopefully figure out your credit and get it back to where it needs to be. And again, you can always bring your credit report to anyone on my team, and we can help you as well, at least try and, maybe help you figure out questions if you have them. So that's all that I have as far as down payment and helping you through the home buying process. Does anyone have any questions that maybe I could possibly answer?
Okay, we have a question from Jay. Go ahead, unmute Jay.
Yeah, I have a two-part question, one about down payment assistance and one about credit. For down payment assistance, I know the standard for a down payment is typically 20% of the loan. How much will the down payment assistance help? Will it help with the whole 20% or 10%, 5%? That's question one. And question two is, when you talk about credit, I know that one of the biggest kind of controversies that I've heard is when you've paid off a credit card, should you close the account, or does that actually hurt your credit because of the age of the credit?
Okay, well, I'll answer the first question. First, with down payment assistance, again, there's misconceptions that a first-time home buyer must put 20% down, and that is absolutely false. Okay, a first-time home buyer, you qualify for FHA. If you're a veteran, military, active, retired, you qualify for VA, which is 100%. There's USDA. There's Fannie, Freddie. So this, and those are 3.5% down payment. 20% comes into play when you are self-employed, bank statement, 1099, or you're buying a second home or an investment property. So for first-time home buyers, your down payment is normally 3.5%, right? Depending on what the client qualifies for, they could get all of the 3%, or they might get half. So it really depends on their income and, when they fill out the application, what they qualify for. And then the second question about credit, I've heard different things. A credit specialist will tell you that you can close an account, pay it off, but don't close it. Just leave it. It'll eventually close itself if you're not using it after a while, and then it just drops off. So I hope that answers that question.
Okay, thank you for that question, Jay. Do we have any other questions? I have one that just came in, Vanessa. The question is it okay to get a new job during this process if it's one that's paying more and it's still in the same career path?
Yes. Yeah. So again, there's always exceptions, right? So say if somebody did start a new job, what the lender will ask for, they'll verify the employment, right? Sometimes it'll be a letter. Sometimes they'll send a form that needs to be filled out. And all they want to do is they want to be able to establish that the income is going to be steady. And then it's going to be ongoing, right? Because there's a lot of people that once they'll start the home buying process and maybe they'll get a raise, right? We've seen that with military as well, even with VA clients. Like they'll come and they'll get a raise in their VA disability, or they'll get a raise in their, housing allowance, right? Or they get a promotion, a rank, right? And that, as long as they can put in this, fill it out to where we know that it's going to be steady, then yeah.
Okay, great. We did have a question from Laura, and she's asking if Hometown Heroes is still active. I've heard in the past whether it being in and out or it's no more funding. So is it still active?
It is, as far as we know, it is still active. Now, how long it's going to be active for, again, because that is a state grant, it's, eventually it'll probably run out of money. As far as we know, it's still active. So I have not heard that it hasn't been deactivated. So.
Okay, we had another question asking, do some of these programs require you to take classes and do anything extensive to get them?
Some of the down payment programs, they do require that the buyers go to a class. I think it's run by HUD, and that varies. But they tell you when we put in all the paperwork to the lenders, and I'm sure some of my team can confirm that as well, that yes, you do have to, the buyers do have to go to a class. But it's usually, sometimes it's even online. You can just go and take the class, and so.
Okay. I think we have another question from Lisa K. Price.
It was just to piggyback on that, Vanessa. It is where a lot of times it depends on the county, and they do require like a first-time home buyer class where they get that certification once they've taken it.
Yes. And if no, Lisa is actually an MLO. She's on our team. So thank you for confirming that. So yeah, it does vary by state and lender. So.
Okay, do we have any other questions for Vanessa? Here's one more. The question was, do these down payment assistance programs, do they also count for closing costs? I mean, can you use some of that for that as well, instead of just simply down payment?
I think it varies by lender. I mean, realistically, once it's all written on paper and they take whatever amount that they're given, yeah, it's just, I guess it really depends on how they write the loan, right? So.
Okay. All right. We have one other question. Minimum credit score for most of the programs.
Most of the programs, again, it varies. I've seen them go as low as 580 for first-time home buyers. So, but they'll go, some of them will go pretty low. But the lowest I've seen is like 580.
All right, 580. All right. Do we have any other questions for Vanessa? We want to thank everybody for coming today. And of course, I know she's available. Our team is available. If you have anything more extensive, if you see the information on the screen, this is how you can contact her at Lending Gig. You can also reach out to myself as well. And keep in mind, guys, if you're just joining us here at our session for Graystone Investment Group, we are a one-stop shop. So if you're looking for lending, if you're looking for property management, acquisitions, or maybe you're an interested agent and you want to be part of us, simply reach out to those the information that you have before us. We would love to hear from you. If you have additional questions on lending, reach out to Vanessa and her team. They will be happy to help you.
Yes,
don't forget.
Very happy.
Don't forget, most of our trainings here, they happen on Thursday. Next week, we're getting back into the culture of accountability, and there's so much more that's coming your way. Also, if you'd like to join us tomorrow, if you're watching this live, we have our summer social for Graystone, and that's going to be at Aqua at 7 o'clock to 8:30. I would love to have you here and network and put face-to-face to people that you see on the screen. So if we have no more questions, we're going to wrap up today. We hope to see you on the next one. And don't forget, with Graystone, you invest, we do the rest. Have a great day, everybody.
Thank you so much.